Alright, I've started the recording as well. Oh, we back to study. Yes, sir. It's gonna be a good stream today. The past few streams have just been like live trading and market updates, but we actually have some proper things to learn now. I don't remember who suggested it, but Fibonacci levels was a very good topic. So if that person's here right now, thank you for that. Yeah, for sure. Thank you, Caleb. Alright. I will go ahead and get started with. I actually have the perfect answer for this. I like getting it. I like annoying tip. Okay. What we're gonna talk about today is how you correctly use Fibonacci levels. So what I'm gonna do is I'm gonna talk about horizontal Fibonacci levels only. So essentially just this two. And I'm gonna go from the very basic levels, the levels that everyone uses and why they work, to the more complex level and the extra numbers that I've added related to Fibonacci levels that work really well as well, and some of the important extensions that indicate what price action will do after hitting them. Okay, so first things first. I have put a few things up on the stream, which are basically the most important Fibonacci levels I use in my trading. Minus a few, I have a few extra, and the reason it works. So Fibonacci levels are, of course, based on the Fibonacci sequence. And I could go into detail, but it would take quite some time. So in short, the Fibonacci sequence is a number sequence which appears a lot of the time in nature, in math problems, but in financial markets as well. And what it indicates is a sequence of numbers that if you divide them by each other, depending on which order you put them in, you will get the same ratios over and over again. So as you can see in this example, this is an example from Scott Carney's books, where a number sequence like this, if you divide it by each other, you will get 0.618, you will get 0.618, etc., etc. If you turn it around, you will get 1.618, 1.618, etc. So these two numbers are at the very core of the Fibonacci sequence. And these two numbers are the most important numbers in the Fibonacci circle as well. There's actually a Fib spiral. I don't actually use this one, but you've probably seen this before, right? Where, let's see, where circles like these show up in all kinds of things, in like nature, in for example hurricanes, or like the seashells. I think that's the most popular one, but these will show up in everything. I'm not going to talk about these, but this circle is the same thing as this tool. These are the same thing, and the horizontal levels are simply derived from this circle. They are levels that we have derived from the golden ratios, so from that 0.618, 0.618 or 1.618. So that is a very brief introduction to how we get to these numbers. But obviously we want to know how we can actually use these. So I'm gonna take my Fib tool. I'm gonna get a Fib tool that is rather clear. And I'm gonna remove essentially everything. So we can start from scratch. And we can get to the most important numbers. So whenever we have a Fib tool, how we essentially use this in financial markets at the start is very simple. What we do is we find a significant high and a significant low. So let's say we want to capture this move. So we want to capture this entire down move, right? In this down move, we have a significant high over here, and we formed a significant low over here. This can be on any time frame, on any length, as long as you take it from a significant high to a significant low, or from a low to a high, depending on what you're measuring, you are measuring it correctly. That is the thing you want to be looking for. And what do? Well, we select the Fibonacci tool. In my case, I always hold Control while doing this, so the magnet tool activates. And I draw it from the high to the low. And what are we measuring here? What we're measuring is what happens after that. So if we have a down move like this, what we want to see is, if we go up now, how far do we go up? We want to know where we stop going up, so that if we have a long, for example, here, we want to know where we take the profits, right? Or where we potentially reverse. That is where these levels come in. So, as said before, the most important levels are two levels. 0.618 and 1.618. Well, as you can see, 1.618, way too far. We can consider this level in the future, but for now this is way too far, right? But the 0.618, so the golden ratio, has actually been used a significant amount. What you'll often see is that it gets used in the past, for example, as a resistance. This is something that happens, so you can measure it with other Fib tools, but that's not something we're going to go over today. So if you see a coincidence like this, know that you can measure that, but it's harder. So what do we see on this 0.618? Well, we see three touches here. We used it as resistance, consolidated below, and we went up, and we started using it as support over here, and as resistance over here. This is the most simplistic way you can use Fibs, where you have a significant down move, you go up, and you use the level as resistance. And you either reject half of it, or you flip it to support. And what we did here is we rejected for a bit, flipped it to support, went below it again, retested it, and dropped lower. Most of the things you guys have learned about, for example, support resistance levels, or pattern retests, or those kind of things, can be applied to Fib levels. Fibonacci levels are essentially support and resistance levels. So that's why we treat them the same way. We can reject from it, we can flip it to support. If we drop below a level, we can get a bearish retest, which we can short, right? This would have been a very nice short entry on the bearish retest. And that's how we can play them. So like this, we could have had a couple of plays based on the 618 resistance, right? Now, often when you see Fibonacci tools, you'll see a lot more levels than this. For example, on the 0.618, we can go in reverse. Oh, by the way, if you have any questions, I am looking at chat, so you can just put them in chat and I will go over them, okay? So let's look at this Fib tool, right? I'll pull it over here, actually. We have this 0.618. Well, what if we take the 0.618 and we put it into an equation? So we simply do 1 minus 0.618. Well, what we get is a 0.382. That is the reason why both of them are golden on my Fib tool, is both of these to me represent the golden ratio. So this one should be golden as well, right? For the 1618. So this 0.382 is essentially the same level, but in reverse. If I were to remove this 0.618, or remove the 0.382 and I press reverse, you will see this is at the exact same spot, right? This is 63.133, and there's 63.133. So that's why. And using these kind of calculations, so for example, 1 minus the number you have, or other things like, for example, a square root, or other kinds of equations, you can get to other numbers. Which leads me to the most important number set, because obviously 618 is great, and it serves well to show you how price reacts to it. Because, for example, we had this 0.618, which we just explained, but you can see it on the 382 as well, where we had this sort of consolidation area below the 0.382, and we broke out of it. We closed the candle right above this, we used it as resistance here, and we flipped it back to support over here. So what are the most important numbers? Because there are way more than just two, right? As you saw on my original tool. The most important numbers in this case are the 0.618, which comes with a 0.382. Then the 0.786, which is a very great indication of a reversal number. Usually when tapping the 0.786, you see at least some kind of reaction, mostly a reversal. At a 0.886. Let's turn this up. And these come with other numbers as well. For example, 0.214 is the reverse of a 0.786, right? And 886 has it as well with a 0.114. I will keep these enabled for now. Let's see, do I have a 0.114 in this one? Yeah. I will keep these enabled for now, but as you can see, these are the same numbers. So 886 and 786 are the same as these. It's just in inverse, right? The 786 and 886 are both serving kind of the same purpose, where if you ever flip the 0.618 to support, like we did over here, or you just rip through it, your first resistance level will be the 786. And the 786 in this case serves a very important purpose in the way that if price action is extreme all the way from the 0.618 to the 0.786, we can expect it to ignore the 786 and react off of the 886. If price action is not extreme, so for example, if we saw something like this, right? If we saw a bit of consolidation here and then go up, we can expect it to reject here and then retest the 0.618 or some other levels in between as well, but that's the basics. So in this case, we saw some very extreme price action here, right? That is a very massive daily candle, and we saw it in advance overalls here. So we expect this to ignore the 786 and reject off of the 886, which ended up being exactly what happened. After that, the only thing we can do for regular Fips is add more levels, right? So we have some non-Fibonacci related numbers, which are very important. So like numbers you will see a lot in everyday life as well. So like a 0.5, a 0, a 1, and a 2, etc. Which are just the very linear numbers, right? You can, for example, take a 0.75 as well for like 3/4, right? Or a 0.25 as well. All of that's very possible. Those are numbers ICT uses a lot, for example. They use simple quarters, 2/3, halves, those kind of things. Those are extra numbers, and I will send a sheet with all of the numbers after the stream. But for now, I want to go over something more important than the linear numbers, which are pockets. So on a chart like this, with only the very basic numbers, right? You might notice that, for example, this 0.618 over here, well, it reacted, and we can see that it reacted, right? We went above, didn't accept above, so we went down again. But it kind of wicked over. This was not a very precise measurement, even though Fibonacci sequences are meant to be very precise. So what we do for that is we have numbers very close to each other that are relatively related to each other. So for a 0.618, for example, we have an important mathematical number right next to it, which is 0.666, which is 2/3, right? And we have a few other numbers like that as well. But especially if you are measuring on a lower time frame, what you will usually do is when drawing a Fib retracement like this, you will say, okay, this area between the 0.618 and 0.66 is my reversal zone. This is the area where I think we will reverse. And you can essentially take that as an extra scalp level. So for example, if you wanted to take a scalp trade, I know some people do this a lot. For example, New does this quite often. You want to take a scalp trade on the golden pocket. You just take the 0.618 to the 0.666 and you place your entry here, and you just go for a few RR, right? And you can reliably get some kind of reaction from it. What kind of reaction you will get depends on how strong the price is. But the thing to take away from this is that especially very common levels like 0.618, they need a little bit of extra room, which is why we use these kinds of pockets. So for the 0.618, that is a 0.66. For example, this 0.214, which is like 786, right? We use a 0.236 to make a pocket. And for the 0.114, we use a number I don't think I have on here. No, I don't. We use the inverse of this number. This number is the square root of an 886. So we use the inverse of that. So it's like, let's see, 0.0. I'll just use 5873. This number has a lot of digits, right? Because it's a square root. So that's why. So using this, we can measure the pockets with an allowance. So for example, let's take this 0.214 to 0.236, for example. If we want to know if price action is actually going to react to this 0.236, we should not see any closes below this level. And the moment we do see closes below this level, we can expect lower. So we have this pocket over here. We close within the level, but slightly above it, so we can expect higher. We came back. We close within it, but slightly above the 214, so we can expect higher. And then right over here, we tap the level, and we actually close below it, so we can expect lower. These pockets are accurate ways of measuring a reversal, and you can take candle closes on significant time frames or whatever time frame you are charting on as a measurement of either strength or weakness, depending on which side you close. Close above means strength, close below means weakness. And this area here is a very good example of that. Close above, strength. Close above, strength. Close below, weakness. That is essentially how you use these kinds of pockets. Which is why you will usually see like a lot of Fib numbers on the charts, right? Because this 0.214 alone is not, like, it's a reliable level, but it doesn't give you all of the information you need, because you can tap it and reject instantly, or you can tap it and go below, but you need like this kind of extra confirmation to be able to know which way price direction will actually go. And for that, we can use these kinds of pockets to measure the candle closes and make a trade based on that. Okay, are there any questions so far? It's taking my time to drink because it's unbelievably hot. Do you think opening a low level long here on Sol instead of leaving it to hit 200 is a bad idea? So for Sol and every coin on the market right now, right? In general, you don't want to be entering longs on candles like this. So I'm just going to use BTC, for example, right? If we pull a Fib measurement, now you know what? I'll actually use that as a segue to the next part, okay? I'll explain why it's bad to open a long right now. So the short answer is no. I think that's a bad idea. Okay, so we can see how Fib levels work on a time frame like this, right? So for example, we only pulled this Fib from the top to the bottom of this move, and we can see it reacting to these levels even after the upwards movement is already over, right? Because this was the upwards move, and we stopped at the 886. But when we went down, we also respected the same levels, right? And this is where we ripped through. This was another level that's minus 0.13 to a minus 0.272. But that's what we'll go over right now. Because these numbers, all of these that we've just explained, I'll enable the others as well, right? all of these that we have just explained, these are retracement levels. So what you can expect is when price comes down, you can expect them to react on the way up. But what if price doesn't do that? What if, for example, I'll put this in chat and I'll zoom in. So what if we zoom in? Because our current BTC range is a very good example of this. So I'm on an hourly time frame right now, right? And if I take a fib pool from the significant high to the significant low, we will not get a lot of information. What do we see? Well, after we tapped the low, price went up, right? Tapped the 382, where we went back down, closed below the 214, so we went lower. Closed below the 114, so we wicked lower, and obviously this is a low time frame, so after we wicked lower, well, we reacted really hard, went up, and it stopped at 0.5. But we couldn't take any actionable plays on this because, for example, we didn't touch the 618 pocket, right, or the 786 or the 886, which are your main rejection areas. These are the main areas you want to be looking for, right? 618, 786, and the 886. We didn't do any of that. So if you would have placed a short scalp on the golden pocket, you would have been left empty-handed. You would have gone a front run and price would have dropped. Now, what can we do when something like this happens is we still have the significant move, right? We still have the significant move, and we rejected here, went down after. So what we can try to do is measure how far it can go. So drop out, we'll watch the recording. Thanks for stream. Yeah, I appreciate it. The recording will be uploaded tonight, probably. So we can measure where this reverses. How do we do that? We have something called extensions and retracements. So all of these levels within 1 and 0, these are all called retracement levels because all price retraces into them. Price retraces into them, that's why we call them retracement levels. So what if we get an extension like this? Well, what we can do is, I'm going to reverse the fibs for this one, right? Because we're looking for a retracement to the downside, so I'm going to press reverse. We can look for other important levels. I'm going to only leave 0 and 1 active, so you can see where I pulled the fib from. And then I'm going to enable the extension levels. So we have 3 extremely important extension levels. The main one being the 1.618. This is the most important one, right? As we said at the start, that is the golden ratio, so that is the most respected level. Now, more often than not, price will not actually reach this 1.618. There are 2 numbers which are very indicative of range deviations, because that's essentially what it is, right? We have this fib range, and we are looking at a deviation. These 2 numbers are the 1.13 and the 1.272. These are the most important deviation levels. You will often see me or anyone else who trades fibs take positions based on this. So we have a range, we drop below, we went to the 1272 and we reacted. And after we reacted and reclaimed this range, we absolutely send it up. The 113 and the 1272 are indications of this. If you have a range, and it doesn't matter what coin, it doesn't matter what time frame, right? If you have an established range and you see price action retrace or extend all the way to a 113 or a 1272, and you see it reacting to that level and going back into the range, or even when you see it reacting like this and you have other confluences, you can take a position based on that. Which is exactly what we did, right? We took along exactly on this level. So we took along something like this. I have it on another chart. But that's exactly what we did. I had an harmonic here, but essentially that just pointed us towards the 1.272 deviation. Deviations like this are extremely common. You will see some traders use them quite often. I know Will does that, for example. He uses the 1272 and the 113 a lot. We also have a pocket for that, which is, we just added it to 1.314, which is pi, right? 314 is pi. So 1.314, this is your deviation pocket. If you see price retrace into this 1272 and 1.314 pocket, and it retraces back up, that is usually a very strong sign of a deviation. And depending on your other confluences, you can take positions based on that. Uh, 0.414, also retracement. Yeah, to some extent. I use the 0.414 as an ABCD measurement for the 707. So for harmonic ABCDs, we take the 707, and if price retraces to the 707, I use the 1.414. But yeah, you can use the 0.414 as well. So if I take this one away, for example, 0.414, you can see that it reacted to this, right? So we took that support here, resistance here. Which is one of the most beautiful thing about fibs, right? It doesn't matter what range you're trading on, as long as you use the correct numbers, they will be used as support and resistance. So for example, the 707 level over here, well, this is not a major level, right? This is not one of the primary numbers. This is not a 786, for example, or a 618. But it is derived from the original fib numbers, so it is one of the important levels. Okay, so I said I would answer why I think it's a bad idea to long it. And for that, I'm going to unreverse the chart. So this measurement, where we, what's it called? Where we just measured the reversal zone of, right? This was a 113 to 1.272 deviation. And I'm going to keep it on my chart. So what I'm going to do is put it into negatives, and if you put it into negatives, it's the same as reversing. Oh, there's no negative there. Added 6 as well. Minus 0.314. So we now have everything, right? Oh, wait, this is wrong actually. I guess, okay. So we had our downside deviation over here, and we know it reacted to that. So something a bit more advanced for fibs to realize is that these fib retracements, even though the reaction has happened over here, the fibs don't disappear, right? On the way up, you will still use them. This price action was really extreme, so we didn't respect it. Just like we didn't respect this resistance area, right? But we do know that we reacted off a deviation here. So what we can take, and price action is actually completely gifting us with the perfect example. Price action right now is reacting to that exact same deviation. We have the same reversal zone here as we have on the bottom. It's a 1272 to 314 deviation on the downside. It's the same thing on the upside. A 1272 to a 1314 deviation. This is the exact reason why you shouldn't long it. I think MGD asked this. Yeah. So because you went above and you are reacting pretty heavily to this deviation area, we can expect price to at least tap this 113. If we drop below it, we can expect it to at least drop to the 1. If it drops below that, we can get the 886, 786, etc. into play. So this example over here is actually a near textbook example of reactions to deviation levels. If you're ever thinking about, okay, I am longing this coin, and this coin is now in price discovery, right? These levels, so there's 1272 and there's 1314, especially the 1618, and we have another one as well, 1414. These levels are perfect estimations of where you can potentially be. The strongest out of these are this pocket. This is the strongest one by far, and 1618. These two are the main rejection areas. Strongest one, 1618. I said it wrong earlier, but strongest one, 1618. Second strongest one is this pocket. Those are the two main areas where you want to look at. Okay, please show me the same example on Sol to understand what's happening. Yeah, the reason I said to not long Sol was is specifically because Bitcoin is at this. I will look at Sol and we are probably going to see the exact same thing. Okay, so I want to look for deviations in this case, right? Not for a retracement, but a deviation, because I want to know where Sol is going to stop this climb. Well, what levels do we have? We have significant high over here. We have significant low over here. So what I'm going to do is I'm going to take that, I'm going to pull a fib pool from that, and I'm going to enable most of my levels, because as you can see, Sol is extremely strong, right? So I'm going to enable the other levels as well. Let's see. I haven't used this tool in a while, by the way, so that is the reason why I don't have the proper ones enabled. Yeah, so what we can see is we rallied all the way past the 1.618. And let's take the other levels into account first, okay? Deviation level number 1, 113. We tapped that, we rejected all of it. Then our deviation pocket. As I said, this is one of the most important ones. We went above it because of the strong price action and have flipped it to support. The moment we flip this to support, we can see this as a sign as we will at least tap the 1.618. What we did is we went all the way above to the point where this is probably actually a 1.886. It's way higher actually, yeah. We went way higher, right? Sol is like extremely strong right now. So we went all the way up, but a 1.618 is still an extremely important level, right? It doesn't just disappear because we went past it. Even though we went past it, the important level still exists. So what we did then, we came back, because we didn't accept above. We're above now, and now we're trying to flip it to support. If we flip this area to support, this 1618, we can expect to at least challenge the next level, right? So in this case, that would be a 2, for example. We just take a 2. We can expect it to at least challenge a 2. What level comes after that? Well, we can just take a 2.272. Which comes after that. So Sol is an example of extreme strength. If you see extreme strength like this, you will likely not actually hold at this 1272 level or the 618 level, but what you would rather do is you're going to go above and you're going to flip it to support. What you're going to see a lot more in my channel as well, because I've been experimenting with it a lot, is you can take various setups. So for example, there's 1272 deviation, right? Because you would look to short this at the start. You can take the flip to support as a scalp play. If we go on a lower time frame, we can see just how much it respected it, right? We tapped, there's a 1.314. We tapped it, closed above, and the next candle didn't even tap it and still closed above. So you can simply take a scalp play either off of this level or on the candle close, right? Something like this. And you would take this 1618 as your TP1 and the level after that as your TP2. So probably a 2.0 or a 186. So we can use it for retracements, like we saw in BTC, where we long the deviation. Or what we can do is we can long, for example, this is our flip. And I put it up. So we go back to BTC. This is a good example of something you would have looked to short on the deviation. So on the candle close below the level, you could have looked to short either like this, right? If you're a scalp trader, or if you have more confluence, you can, for example, short something like this. Take DCAs, whatever. Deviations level like these are things you can use as a confluence to trade on. But you cannot use them as the sole reason to take a trade, for the simple reason that where are you going to put your stop loss, right? So for something like this, you would simply zoom out, go to the left, take a significant resistance area. So if I look at to the left, I think we should have some kind of, yeah, so we have a daily order block here. And we can just, for example, use the mid of that as stop loss. That doesn't really matter for now, that simply depends on a trade-to-trade basis. Because, for example, using our BTC long, for example, right? We longed, I think it was this. We took this long. So what I did is, okay, this is a 272 to 314 deviation. Took the long based on that. Stop loss based on the harmonic. And it doesn't matter which trading style you use. If you, for example, trade, let's say ICT, right? We would go on a lower time frame. We find a lower time frame fair value gap, which is over here. We have an FEG over here, which only got partially filled. Yeah, didn't tap the half yet, so that would be valid. Or we could use that as stop loss. No matter what style you trade, if you want to make plays on these deviation fibs, you can easily take position based on that, and then you have to get some extra confluence, get some volume, confluences, or from a different trading style. You can just take the long based on that. Am I late? Well, you are kind of late. I went over the basics at first. And I am recording everything, so if you're missing anything, you can just watch it back later. Gotta make sure the recording is uploaded tonight. Please can you clarify the most essential levels to use? Yeah. Actually, I'll make a little cheat sheet, okay? Let's go over here. I am gonna make a fib pool. And what I'm gonna do is I'm gonna go over each level one by one. The most important levels to use. I'm gonna make a few of these cheat sheets, okay? So I'm gonna separate it. 618, 382. This is the same thing. This is both a golden ratio. So 0.618, 0.618, and this is the inverse. 786, and I think I deleted the 886. 0.886. 786 and the 886. I'm gonna only list the primary numbers on this one, because this is gonna be a cheat sheet with the basic levels, right? So 786, 886, and then we use the inverses of that as well. I don't know if I have a marked on here. I don't think I do. Okay, so I'm gonna use the 0.214, and let's see, 0.114. These are the levels I use the most. The only one that is missing here is a 0.236. I personally don't use the 0.236 that much, other than finding faulty harmonics. I'm gonna list it here. This is part of a pocket. The 236 is only part of a pocket, but it is an exception in the case that this is actually a significant level. I'll make these black as well, actually, for visibility. I'll put it in a box for the screenshots. Primary retracement levels. Which one is missing? The 0.5 is missing. These are the primary retracement levels. These are the levels you're going to be looking the most at. Which ones do you often want to base a play upon? The priority goes to the 618, 786, and then 886. These are the levels you want to take shorts based upon. Put a screenshot in chat. Those are the primary retracement levels. Now, if we enable the other numbers as well, what I'm going to do is I'm just going to quickly go to my other level, right? And edit it a bit. Oh, that's the wrong line, actually. It is what it is. Is this visible for stream? Because I know they're rather transparent. Obviously on purpose because I use them a lot. Is this visible, these numbers? Yeah. Okay, so what I'm going to do is I'm going to enable the disable the extension levels for a second, because these are not part of the screenshot. These are the advanced retracement levels. I know I added a bunch. I know I added a bunch of numbers. The only thing you should take note for this, let's see, I'll post a screenshot first, is that these include the pockets. So for example, the 786 is forming a pocket with the 764, which is the inverse of the 236. This is forming a little pocket right here. For example, this is forming a pocket, right? These are pockets. You don't need to know all of the numbers. If you use fibs a lot, you will eventually know them. So apart from like the square root of the 886, I can get all of them in my head, right? The most important thing you need to know is how you use them. So 382 to the 414 pocket, 786 pocket, 886 pocket. You use them the same way we explained at the start. Closest above indicate strength, closest below indicate weakness. These are the advanced retracement levels. Now, what we just talked about was a deviation, right? So let's go to the deviations. Actually, I'll do this on this one. It's more clear. For deviations, we want to look at the actual deviation levels. These are, in my eyes, the most important ones. So what these indicate, these are, how we call them in harmonics, field wave extensions. Essentially what this means is if you deviate above and you reject off for 113, you're going lower. If you deviate above and you're deviating off for 1272, you're going lower. And then the 1414 and the 1618 have a bit of a different use case, where 1414 will usually just lead you back to the 272 and then send you up. And the 1618 will usually send you back to the 1414 and then maybe up. These are how I use the extension levels, and I'm going to enable the other ones we talked about as well. So 1.314, we talked about that one. Enable that as well. These are the most important levels, and this one, well, this one is the most common one for deviations. So I'm gonna just get an arrow in here, put some text on it. Deviation level. If you see range deviations like this, 1272 to 1314, like this, that is the most common area to look for deviations. If you deviate above a range, you react to that area, you can take a short. Other way around as well, right? If you deviate below and you react on a 1272 below, you can take a long. You need to take other trading things into consideration as well. Is there actually enough volume, or is there nothing below you? Is the price action extreme, or is it not? Is it building like that? All of these are important things you need to consider. These are here to give you a solid extra confluence. Let's edit it to let's see, deviation levels. So this area is for deviations. You will likely get back into the range if you react to these. The area above, so the 1414 to the 1618, do not necessarily indicate a deviation. They could also simply mean, okay, price is exhausted now. We're going to test the previous level first. Put this into chat as well. Okay, let's see. Are there any questions? All right. Then what I'm going to be looking at now, because these are the most supported levels, right? We have a few more. Those are rather extreme levels. So for example, well, essentially the most important one that we haven't talked about is 3.14. You can extend this, right? This is supposed to resemble pi. I was lazy when I put it in, so it's 3.14. Which will be all the way up here. These are for very extreme cases. So if I go on, let's say I have the data here, right? I take this initial measurement from this significant top over here to this significant bottom over here. We can see that even though this is a very old level, right? This is where I pulled it from. This extension turned out, or ended up, being our SR level, essentially, at 71.3k. We used it as support over here. Resistance, resistance, resistance. Extreme extensions like these happen as well, where you can essentially like pull up the important levels, right? For example, 3.618, and you will essentially see that everything is going to be used as a resistance in the future, right? Letters does this a lot, for example, where letters will literally take like one candle over here and use ridiculous numbers, right? So for example, this, and he will use like an 11.618, something like that, like very extreme extensions. I personally stop at 3.618 because in my eyes there's no point in measuring beyond that, and it works to some extent, but like why would you do it if you can also just take a new fib level, right? So levels like these, like extreme, it's called, these extreme extensions are more common on altcoins than on BTC because, well, BTC had like this massive rally up here, right? But it doesn't happen all too often. Okay, let's see. Those were the standard things I wanted to talk about fibs. I know I've talked a lot, and there is a lot of information on this. So I do recommend anyone that that finds this interesting, either take your time to learn it or watch back the recording or whatever. because I know that's a lot of info. And just test around with it, right? These Fib numbers, they work really well. My entire trading system is based upon it, right? Like, I trade harmonics, but harmonics are based on fibs. I am essentially trading fibs. Every Gartley, for example, every, let's see. So let me just draw a Gartley. Every Gartley has like this thing where you essentially take the deviation of B to C or A to B, right? So take the A to B, and every Gartley's D point will be at this deviation pocket. Which is one of the reasons why they work, right? Even though it's against the trend. This is what I've based my trade system upon, on these fib levels. So I highly recommend anyone to check that out. Now, the other things I wanted to talk about, because we've talked about all of the levels, right? But as you can see, there are still a lot of things that I use in this system that I haven't talked about. So you will notice that, for example, my fibs are very light. And they don't really show anything, right? They're actually very hard to read and very, very transparent. Why is that? Well, as you can see here, I'm going to use the very old fibs we drew as an example. I'll also just delete this for a second. Wait, why is that not delete? So, for the record, I'm using these fibs as an example, right? We drew it from this range. The thing is, about fibs that not a lot of people realize, that fibs don't disappear if price action goes outside of the range. These fibs stay, right? The 3.14 is still here, even though that's a very old range, a very old fib pool. So if you want to mark a lot of plays, you're going to have a ton of fibs on your chart. And in my opinion, if you get used to the fibs, right, it is extremely useful to actually use that. You can get a ton of data with it. So let's look at it like this, right? And then we'll find out why my fibs are so transparent. If I take every move, right, top to bottom, is bottom to top, bottom to top, top to bottom, you will see an absolute bunch of fibs on my chart, like a ton of them. But what you will also see is within the chaos, you have certain areas that are a bit more distinguishable. There are certain areas where you will see a lot of lines on the same place. So for example, over here, in this area, there are quite a lot of them together. Same thing over here. And same thing over here. You can see that even though you can't actually see the exact numbers, I've color-coded some of them, right? So I can know which numbers they are. But even though you can't see the numbers, you can see a lot of them forming on the exact same areas. So that's why, for example, this 57.5k range, well, we had a bunch of fibs there, which is why we use it as support and resistance so often. If I go and zoom in on this, let's say this, for example, right? This area, use it as support, use it as support. Deviated below, use it as resistance, use it as support. That is one of the things you can look for if you trade a lot of fibs, where I will have one setting, which is my default setting, right? Where my fibs are very transparent, and I simply look for clusters of fibs. These areas, these areas that I've marked in blue, these are called fib clusters, and they are a way of identifying important SR levels based on past price action. So we can take all of this past price action, all of this, and we can see before we even finish this move, right? We can see, okay, this is going to be a very important area. We're going to need to flip this to support to go higher. And that's the information this is telling you. So we can already tell in advance that this area, around 70k, will be an important area. If we keep pumping, we will likely reject off of this area first. If we don't reject, we need to flip it to support before we go higher. That's one of the important fib clusters. If you ever see someone's chart have like a bunch of fibs like this one, all you have to look for is areas where there are more fibs together, areas with fib clusters that eventually form the sort of support resistance area, which I can show you a very extreme example of, right? Don't let the charts carry you away. But for example, this chart, pure chaos, right? You can see absolutely nothing, like completely nothing. And I've been on this chart a lot. I can't see anything here. That really doesn't come with time or anything. There's just nothing visible. But if you go to a very low time frame, we can see all of these areas with important fib levels in the past. We're reacting off of each of them, right? For example, here, this is a 0.414 over here. Or, for example, this line, this is a 0.618. Which goes to show to what extent you can use these. So you can use these past fibs of past ranges or of macro levels to indicate future price action. And to what extent you want to do that, well, that's up to you, right? Charts like these can be very chaotic, which is why I don't show them all too often, because, well, in the end, they're not really usable unless you know exactly how they work, right? But we can use that for other reasons. For example, this one. Just take a macro fib. For example, this one, right? Yeah, no, I agree, Maddie. Bro, that chart, whenever I zoom into it, because I do zoom into it, or I do click on it every now and then, right? And if someone was watching my stream and I just click on it without context, they're going to be like, what on earth is that? But it is really useful, I promise. But what I wanted to go to with that is using fibs from past areas. So, for example, our past bear market, right? The massive drop we had. We use this drop to see future price action like this. We can see that we react off the 0.618. We, We flipped to support over here, flipped this 0.66 to support. We went to the 0.707. This was a 0.786 flip, etc. And we can use that for multiple areas. So for example, if I take the run before that, you can see that this bounce we had was exactly off the 0.314. So levels like these are a sort of advanced way to using fibs, where if you just start with fibs, you only use them for retracements, right? Like I did at the start when explaining the basics. If you are looking for a more advanced way to use fibs, what you can do is you can do something like this, where you draw it on areas in the past, on the significant high, the significant low, and you see how price reacts. Well, if you did that, you can see that this 0.314 all the way from our last bull run, but the run before that, right? We use it as support, right over here. This is the area we flipped to support on the last dump, because this missed the support flip, even though it's a very important level. So we went back, flipped to support, and went up. And you can use that the exact same way we talked about at the start of the stream. We tap the level, we close above, that means strength, right? We tap it, we close above, that means strength. Now, if we, let's say, tap this level and we close below, that means weakness. That means we're gonna at least test this 2.618 over here. And this is one of the most beautiful parts about fibs, right? Because, again, this is a very old fib, but you can see how well it reacts to the area. We react over here, flip it to support over here, or the 224. This ended up being a support level as well, this 0.2. And the most important one on this chart is this 786 pocket, which marked the bear market low. Yeah, Bird, for sure. I know Weatherman has to be teaching you some extreme stuff with fibs as well. Like the stream is only about horizontal fibs, right? But you can do so much with this. But you actually made a thumbnail for me. Oh, that's very nice, actually. Yeah, I can use that. No, I can use that. It's all good. I don't actually have, because usually I use screenshots, right? Usually I use like a screenshot of comments I get or something. So I had, for example, with comment on Twitter that said like, there were like a bunch of harmonics on there, right? I still have that chart. That was like this chart, right? Or was it an old one? I think it was this one. Yeah, it was this one. Where it just said, yeah, I don't know what this chart is. It looks like my daughter's drawing, but I trust this guy. So I use comments like that usually. So a thumbnail is really good as well. And I don't have a thumbnail yet, so I can use it. Yeah, or the tortillas, exactly. Okay, so that was essentially most of the things I wanted to talk about. Because you can do a lot with fibs, right? You have a bunch of other tools as well. So for example, this tool, right? Let's see. I thought this was the correct level. We have a bunch of other tools as well, right? Like we have diagonal fibs, for example. And I use these as a complete blasphemy, by the way. I'm not going to teach these because I use them completely based on harmonics. But we have fib fans as well. And all of these can give you a pretty accurate measurement of what price will do. And they all treat the same way. So one thing you can take away from this is everything I've discussed in this stream about fibs, about how you use them as supported resistance levels, about how you use them with candle closes or with touches, and the things that indicate strength, the things that indicate weakness, or deviations, or those kind of things. You can use all of that no matter which fib tool you're on. If I go to the EVE chart, for example, what's it called? Well, actually, let's just beat C and clear this. There is, for example, a very good channel here, logarithmic scale. Log scale is the next thing I'm going to talk about, and then then I can look at some other things. So, log scale for fibs changes a lot. I'm going to talk about them in a bit, but first I wanted to showcase how you can use, for example, channels in the exact same way you'd use fibs, right? So if I take this channel from a last bull market, you can see just how well it reacts. We can use it in the exact same way as horizontal fibs. You can see, okay, touch the level, reject it, right? We went back below. We at least went to this level. Well, went back up, shot short. Didn't even touch the level, so we went below. We can use it the same way. For example here, touched it, closed above, means strength, means we go up. And if you zoom in, you can see just how well it works, right? It aligned with the 1272 to 1.314 we talked about earlier. So no matter which way you use fibs, if you stick to the rules that I highlighted at the start, where you take the significant high, then you take the significant low, and then you use the correct numbers, you will be able to see it, to see price action react to it, as long as you follow those rules. Fibs are extremely self-reflective in a way that as long as you follow those rules, price action will follow it. I mean, you can just see on this one, right? There's a diagonal channel, but look at how many times we touched this. And we're still doing that. And I can show diagonals some other time, right? But for now, we're going to stick to the horizontals, which leads me to the next part, the last part I wanted to talk about, which is different kinds of scales. So essentially all of you will only be used to regular scale, right? Linear. Linear scale is the thing you can see on the right here, where it just increases 1k, 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 and price is completely linear, where it increases every 10% will be 10%, right? And it will show it like that. The best example of this is if I go on a macro time frame, complete macro time frame, right? You can see the difference between linear scale and something else, which is logarithmic scale. Logarithmic scale is based on logarithmic paper or the formulas, right? And the beautiful thing about log is that fibs are completely compatible with log scale, yet they will give you completely different levels. So, for example, let's do the exact same thing we did earlier, but do it on log scale. You want to make sure you do this, that you have this thing enabled here. Fib levels based on log scale, right? That is the most important setting for this. If you have it on log scale, everything will slightly change based on the scale rather than the raw numbers. If you don't have it enabled, they will stay on linear numbers, and it will look really weird. If you have it enabled, it will change. So what I'm going to do is I'm going to take this fib from our old all-time high to our bear market low, and I'm going to put it on fib. So I'm going to put it on a logarithmic scale. And what you can see, and I'll put it like this so we can see the difference, right? The fibs change. They change from linear to log. This will give you a different result with the same system. So you will be able to get a completely different result based on that. If you ever see numbers on the left on my chart, everything on the left is based on logarithmic scale. Everything on the right is based on linear. This is so complicated. When we started, now an hour later, teaching seems so simple. That is really great to hear. Yeah, it really is like that. The thing with fibs is they are so incredibly self-reflective that you will truly go, wow, you'll truly go like, okay, is this actually gonna work? And then you just draw like a very old level, right? Like the one we just drew on the market over here, and you will just see price action react to it. Like you will see price going to it and just dumping off of it, and you're gonna be like, wait, why did this work? I think nearly everyone who actually actively trades fibs will have had that moment where they go back to like a very old chart and they will see price just react off of very old levels, right? Like I would have an old fib pool still on my chart, or like a TIA chart, for example, and I would just see it reacting off to 2.618 that I just left on there, where I'm like, well, that's incredible. But let's do it for this, right? Log scale. So I can pull the same fib twice, and one is going to be linear. One is going to be log, right? If I turn off log, it's going to be the same levels. If I turn on log, only the one on the left will change. The one on the right will stay the same. Because the one on the right is linear, one on the left is log. And this is going to give me the exact same confluences that the linear fib will give me, except for slightly different levels. So, for example, let's take this 0.94127 over here. So the square root of an 886. Well, remember that old the old 1272 we talked about over at the small range over here. It was the exact same level. I'm going to draw it from right to left because I don't feel like reversing it. It's the same thing, right? So you can see it over here. I'm just gonna pull off this one for the 1314. what you can see is that it's 1314 on linear scale, because one on the right is linear, right? This 1304 linear scale aligns exactly with the 0.94127 on the log scale from our old all-time high to the bear market low. Things like these happen really often with fibs, and if they happen, they can form a very accurate area of reversal, right? For example, this resistance over here, we tapped this level and just kind of nuked down. We even closed below the 886, so we went even lower. And that just goes to show, like, as long as you stick to the rules, it will simply work. In the same way that that I showed earlier with linear scale. Log scale is something very useful, but it takes some time to understand how to use it. Essentially, the thing you want to use it for is very extreme price action increases, right? So if I want to, for example, take this area into account, right? This area. Well, a regular fib isn't going to cut it, because if I draw a regular fib on this area, and I'll use the macro one to make it more clear, right? Well, that's not really useful, is it? Well, you can see that we use it as support over here, but I can't use this here. It's not useful. So what I can do is I can put it on log, my chart on log, and ta-da! We have accurate levels. For example, the exact bear market low, 2.24. And keep in mind, this is a fib from two bull markets ago, right? This fib is at $1,000 BTC to $160 BTC nuked like 90% in this area. What on earth? It's like we're using this fib, this exact fib from 2014, and this fib indicated the exact bear market low. Like this 224 fib is at 15,525, and this is fib, and the lowest we went is 15,479, which is incredible, right? That is one of the major things you can use things like log scale for. And it's a rather extreme example, right? I would need to use, like, for example, 2.786 or 2.886 to see what we rejected off of, because the thing with log is really hard to do out of your head, but it looks like a 2.886. No, see, that's really hard to predict. The 2.886 would use over here as support and over here as resistance. I'm not gonna try and guess this. Log scale is something you can't do out of your head. Like, humans can simply not, like, comprehend logarithmic scale manually, which is why we have separate paper for it, because it's, like, incredibly hard to see. Because keep in mind, this 314 might look close, right? But that 314 is like 44% up. Like, that is at nearly 100k. So I use logarithmic scale for that, for linear fibs from, like, all the way in the past, and I use it for fib channels. So, for example, if I would draw a diagonal fib like this, I'll be able to use it for this, where you can see that, well, that channel all the way from the past formed this intersection here, right? Giving you essentially a time and place indication of where the bear market low would be. You would just be able to tell that, well, this is going to be your bear market low. And we can use that to predict all sorts of things, right? These crossings and these support resistance touches of all channels, we can use these for all sorts of things. Because price, no matter what happens, right? Price will keep respecting these levels as long as it can. So when you go this far into history, it's gonna become hard to get significant parts, because you want to use price action that is as significant as possible, because you're gonna go so far into the past for it, right? But once you do have them, you're going to get some very accurate diagonal levels that you can use in combination with these horizontals. So that is something else I use log scale for. Things like log scale are essentially just an extra, right? You can use them on very extreme charts, or you can use them on charts where regular fibs aren't like cutting it, right? The regular extensions. It's completely extra, and it's a rather advanced way of using fibs, but it is a rather accurate way of using them. If you want to really use data like all the way from the past, logarithmic scale is the way to do so. All right, that was everything I wanted to talk about. The most important things to take away from it were the levels we used, right? Put a few screenshots in chat, and I will put them in my channel as well later. So we talked about the different kinds of fibs. We talked about how to draw fibs. We talked about extensions, about deviations, about retracements, what the different kinds of levels mean. So, for example, the 1272 is a deviation level, so if you touch it, you will likely go lower. And we talked about some other things. Logarithmic scale, we talked a bit about channels, etc. So I think that was everything I wanted to talk about. Are there any other questions? Otherwise, I'm gonna look to end the stream here. Because it is still incredibly hot. Is it good to know both fib levels and harmonics? Yeah, so harmonics are based on fib levels. So if I would, for example, if I take a fib over here, right? You can see that we reacted off of this 0.886. Down move, 0.886, yeah? If I make an harmonic, and I know there's a bad harmonic there, I can see, okay, we reacted off this 0.5 over here, 0.5, put it up, and 0.886. You can see that this 0.886 is represented as a number over here. That is because fibs are, harmonics are completely based off of fibs. Harmonics are essentially just M shapes with exact fib measurements, right? So X2D is the 886 retracement of X2A. So if you want to get into harmonics, which I can obviously recommend, right? I can highly recommend harmonics. I absolutely love training them. If you want to get into them, just go to like my pinned message in my channel. I have a small guide on it there on how to get into them. And essentially what it tells you is here are a few videos, here are a few cheat sheets. And if you want to get into advanced harmonics, you need to read the books. The first book that I have recommended there, off of Scott Carney's books about harmonics, the first book there is essentially the start of it talks all about fib retracements. So the start of it just goes over every individual fib number at the start. So for example, 0.618 over here, right? That is essentially what it talks about on the start. Harmonics are the same as fibs. They are simply an advanced measurement to be able to put a lot of fib levels together. So this is 0.886 from X to A. And if I take B to A, right, you can see that at 0.886 also aligned roughly with this 1.618 over here, which is a characteristic of a bat. And if I take the BTC, we're going to see the same thing, right? We can see this 2.24 being at exactly the same spot. That's how harmonics work. Harmonics simply put multiple fib levels in the same spot. And that's why they provide accurate reversals. Where can I check out the recording? We have like a dedicated recording section. I can link that for you. 1 second. Okay. I'm gonna post it over here. All the old ones are there as well. So harmonics is good to know as a supplement to fib levels. Yeah, if you like fib levels, if you like trading them, and you want to learn something extra, then yeah, absolutely, I recommend harmonics. Harmonics are a very good way to gain very actionable insight about fibs. Because in the end, fibs offer you a lot of information, right? Like a lot of information. If I go to Maker, for example, and then I'll make it because I have an active call on it, right? Wow, that pump. Okay. I have an active call on Maker, right? What's this one? Oh, just going. Yeah, so what you can see here, these are a bunch of fib levels, right? There are no horizontals here, but there are a bunch of fib levels here. And they grant you a lot of information. Like this diagonal 0.618, for example, provided a few good touches here, right? Kind of over here as well, and this 0.5 is providing us a touch right now. But these provide you a lot of information, and you can use them a lot in your plays, and you can use them a lot to base trades upon. But harmonics give you a very accurate plays that says, yeah, for example, this butterfly, yeah, this 1272 extension, it's part of a bigger fib cluster, so this is where you reverse. That's essentially what harmonics do. They take all of that information from fibs, put it into one area, and they say, yeah, this is where it's going to reverse. So if you like fibs, if you like trading them, I can highly recommend harmonics as an extension to that. Yeah, no problem, guys. I'm glad you liked it. Alright, that's gonna be it for me today. I am gonna like get ice cream or something. I don't know, it's way too hot. I appreciate everyone for coming. There are a lot of people here, a lot of good questions, so I appreciate that. I'll end the recording here.